Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. India is taking a big leap toward making itself self-reliant in rare earth magnets. The government has approved a first of its kind 7,300 crore rupees scheme to set up rare earth magnet processing units and supply chains domestically. Soon to be placed before the Union Cabinet led by Prime Minister Narendra Modi, the plan details are capital expenditure 65 billion rupees and operational expenditure 8 billion rupees. The goal is to build a homegrown value chain spanning the conversion of NdPr oxide, that is neodymium, praseodymium, into sintered NdFeB magnets or neodymium iron boron. These are critical to sectors such as automobile, electronics, wind energy and defense. The REPM production includes mining, beneficiation, processing, extraction, refining to rare earth oxide, conversion to metal and alloy, and finally, magnet manufacturing. The proposed scheme will incentivize facilities capable of undertaking the final three stages, converting rare earth oxide to metal, metal to alloy, and alloy to magnet. This move comes in the wake of China's export restrictions earlier this year on 7 rare earth elements and finished magnets, which now require licenses and end-use declarations for exports. It aims to build a fully indigenous magnet ecosystem with an annual production capacity of up to 6,000 tons, enough to meet India's domestic demand, and is expected to run for 7 years. With this initiative, domestic companies in the rare earth and magnet manufacturing space are poised to gain momentum. Here are some stocks to watch. Before we move on, please note this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of our way, let's get started. First on the list is Hindustan Zinc. Hindustan Zinc Limited, that is HZL, is India's leading zinc-lead producer and a heavyweight in the global metal space. Beyond its core business, the company is making a subtle shift into critical minerals. Hindustan Zinc, a subsidiary of Indian Natural Resources conglomerate Vedanta, wants to mine and process neodymium, a rare earth used in permanent magnets. Hindustan Zinc has emerged as one of the key private players to win bids in the government's fifth tranche of critical mineral auctions, which for the first time included blocks of potash, tungsten and rare earth elements. The company successfully secured a rare earth monzonite block, a non-radioactive deposit distinct from the bit sand monazite typically mined by Indian Rare Earths Limited. This positions HZL as a first mover in India's private rare earth exploration space, especially for neodymium, an essential component for permanent magnets used in the EVs and renewable energy systems. Further, Hindustan Zinc is exploring partnerships across AI and drone-based exploration technologies, collaborating with international experts from Australia, South Africa, Chile and China to enhance efficiency and discovery, as highlighted by Chairperson Priya Agarwal-Heber at company's 59th annual general meeting. With India's push to build a self-reliant rare earth magnet ecosystem, Hindustan Zinc stands out as a stock to watch. Backed by its early move into developing domestic sources of neodymium, a critical element used in high-performance permanent magnets. Next on the list is GMDC. GMDC has long been known as Gujarat's lignite champion. But the state-run miner is slowly shifting gears from a traditional coal and bauxite producer to a forward-looking critical minerals player. The company is developing one of the world's largest rare earth deposits at Ambadungar in Gujarat's Chota Udaipur district. The site will feature an open pit mine, modern processing plants, workshops, and even residential facilities built to create a state-of-the-art mining and living ecosystem. The Ambadunga deposit is rich in light rare earth elements which are vital for industries worldwide. The mixed rare earth carbonate produced here will be sent to GMDC's upcoming separation plant in Bharuch, where it will be converted into high-value rare earth oxides like neodymium, praseodymium, lanthanum, and cerium, materials essential for everything from EV motors and magnets to glass and optical components. GMDC's vision is to create a complete rare earth value chain in India, right from mining to processing and end product manufacturing. With India's new rare earth magnet scheme, focused on boosting domestic processing and manufacturing capabilities, GMDC is one of the top stocks to watch, given its ambitious plans to build an integrated rare earth ecosystem within India. Next on the list is NALCO. The company is known for aluminium production, is diversifying into critical minerals through both domestic exploration and overseas ventures. The company is now entering into critical mineral extraction. It is part of a joint venture called Khanij Bidesh India Limited, which has acquired 5 lithium mines in Argentina and is conducting detailed exploration to assess commercial viability. NALCO is also exploring the possibilities of investing in lithium refining operations in Australia and is looking at acquiring exploration rights for critical mineral blocks in India when auctions occur. Additionally, NALCO is working on extracting gallium, another critical mineral, with plans for commercial production within 2 years. Media reports indicate that NALCO is setting up a prototype facility at its Damanjodi refinery, which is expected to be ready within 8 to 9 months, followed by a year of testing before commencing commercial production. Once operational, the facility will make NALCO the first company in India to manufacture gallium commercially by 2027. With its growing presence in lithium and gallium, both critical to the rare earth magnet value chain, NALCO is well positioned to benefit from the government's new rare earth magnet scheme, making it one of the top stocks to watch in this space. The Navratna company will extract gallium from the waste generated from its alumina refinery and in the process of making it the only manufacturer of gallium in the country. This project will make NALCO the only domestic producer of gallium, a rare metal that plays a key role in neodymium iron boron magnets. When added in small amounts, gallium can significantly enhance the magnet's performance, improving both its coercivity and thermal stability. Next on the list is Sona Comstar. The company has historically been strong in differential gears and starter motors, holding significant market shares globally and dominating the Indian market for differential gears. But now, Sona Comstar has been strategically prioritizing electrification with a large portion of its revenue and order book coming from battery electric vehicles. Its products for EVs include EV traction motors and EV differential assemblies. The company is also diversifying its product portfolio and market segments, moving beyond traditional automotive applications to include components for drones, eVTOLs, that is electric vertical takeoff and landing vehicles, AGVs, automated guided vehicles, AMRs, that is autonomous mobile robots, industrial robots and humanoid robots. Sona Comstar is one of India's leading importers of rare earth magnets, but it is now set to begin domestic production of these critical components. It's the first Indian company to announce plans for local magnet production after the government's program became public. The company supplies gears and motors to car makers such as Tesla and Stellantis and imported around 120 metric tons of magnets from China in the last financial year. The company has the funds for local manufacturing, citing its five-fold increase in revenue to more than $400 million over the past 5 years. Overall, India currently imports almost all of its rare earth permanent magnet needs. Government estimates place domestic demand at around 4,010 tons a year, expected to almost double to 8,220 tons by 2030. The recently approved 73 billion rupees scheme to set up rare earth magnet processing units and supply chains is expected to accelerate the development of a self-reliant domestic ecosystem. This initiative is likely to benefit companies involved across the rare earth and magnet value chain. However, investors should remain cautious of execution risks and the long gestation period associated with such large-scale infrastructure and mining projects. Investors should evaluate the company's fundamentals, corporate governance, and valuations of the stock as key factors when conducting due diligence before making investment decisions. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.